welcome address. So welcome to this event on the Indian Budget 2021. We're glad you've come in such numbers, and I know that a lot of people still joining, so we'll take it a slightly easy before we launch into it so that people can join and get the full benefit of the event. Today's speakers, there will be some who will not be able to stay with us throughout the period. So what we will be doing is that during the sessions for the content-based speakers, we will open the floor for you to put your questions in the chat. However, given to the paucity of time, we will be only able to take maybe 1 or 2 questions, depending on how long the question may be. Furthermore, we have the keynote addresses first, and then we will launch into the content-based part of this particular per speaker. And then finally, we'll end up with closing remarks. So further, the last thing is that we would ask you, this will be taped, this event. So in the event that you have issues with images being used, please make sure that not only you're muted, but you're also, your video is also not on. Otherwise, we're happy to have you online and also with us today. With that, on that note, I would like to give Vikas, Chairman ICAI and Chairman of IDFC, the floor to Dr. Vikas Chaturvedi. Can you please do the opening remarks?
Perfect. Thank you so much, Prachi. Friends, a very warm morning to all of you. Afternoon to all of the people who are participating from India. My heartiest welcome to our ambassador, sir, Pradeep Kumar Rawatji, on this webinar. This is the first webinar, sir, where we have this pleasure of having you with us. We are also delighted to welcome our new Vice President of ICAI India, Mr. Debashish Mitraji. He has been recently appointed as the Vice President of ICAI. So sir has 2 phenomenal years from here to take the institute to the next level. All the dear friends and members of the fraternity, corporate fraternity between Netherlands and India, I am delighted to welcome you all to this webinar on Indian Union Budget 2021, exploring new business opportunities. So friends, when we say exploring new business opportunities, it's very clear that the relationship that India and Netherlands has witnessed so far is in an engaging moment, which has been built upon in last, especially 5 to 7 years. And to take this movement forward, I think it is the time now to come together and see where are the business opportunities which lies for Dutch companies into India. As you all are aware, India is the top 5 contributor to the Netherlands, and Netherlands is the top 5 contributor to the Indian market. With this budget, which was announced by our finance minister on 1st of Feb, the government has gone a step ahead in not only looking at the past, the stories of past where the government was looking more on tax issues, both direct tax and indirect tax. The thrust of the government in this budget has been to lay down the foundation of the economy. The finance minister obviously spelled out her dimension of 6 pillars views that she mentioned out. The roadmap was very clearly spelled out in the starting of the budget. If you look at these 6 pillars, these are fundamentally healthcare, infrastructure, inclusive development, innovative R&D, minimum government and maximum governance, and human capital. So the entire budget this year, friends, has been figured out on these 6 pillars. And I'm not going into too much
goedemorgen.
into it. I'm sure
Dank u wel.
the speakers,
Hetzelfde.
request everyone to put on mute, please. Only at the time of Q&A, we will request you to unmute. Thank you. So again, the opportunities that lies in these 6 pillars are immense, which the speakers are going to address. As Prachi already mentioned, we have the session divided into 3 elements. The first element is the address, where Ambassador Sir is going to speak and Vice President Sir of ICI is going to speak. Then we have the tax and regulatory session where speakers will address the changes in direct taxes and indirect taxes. And then we have a session on the regulatory updates where more opportunities in details would be explained by people from Invest in India, and the policy framework would be discussed with us, with Aman Jha, who's a leading Supreme Court advocate. So friends, on behalf of Institute of Chartered Accountants of India, Netherlands chapter, on behalf of the India-Dutch Financial Corridor, on behalf of Indian Embassy, and on behalf of Invest India, I welcome you all to this webinar. This is 1.5 hours webinar. So the session is clearly, you all have the agenda for this. So without any taking further on the time, I would request the Ambassador Sir to give his keynote address. Friends, I request whatever questions you have, please put it in the chat box so that at the last, the questions can be picked up on the speakers. And during the webinar, I request everyone to mute themselves. I wish all of you a very nice afternoon and a very nice and engaging webinar. Thank you so much once again. A heartiest welcome, Ambassador Sir, to you. I would request you to please give your address to the participants. Over to you, sir. Thank you.
Thank you, Vikas. First of all, good morning in Netherlands and good afternoon in India. I would like to convey my deep appreciation to ICAI, IDFC, Invest India, and all the distinguished speakers who have taken their valuable time to share their expertise on some of the issues that Vikas has just mentioned. Many of you know that I was recently in India and I'm currently under quarantine at my residence. Fortunately, I did my COVID test and it has come negative. So from today onwards, my quarantine will end. The reason I mentioned that I was in India, that in India, I saw, if I may say, a beyond COVID phase. In a sense, today, when you visit India, you don't see that people are, in a sense, we are joking that people are out and now coronavirus is hiding from people in India. So you see that kind of vibrancy in India. So it doesn't come to me as a surprise when I look at the recent economic forecast that for the first time, India may actually cross into the double-digit growth rate. You would have seen the recent estimates from OECD, which says that it would be in the range of 12 or 13%. And you can see that vibrancy in the Indian economy. Certainly is coming from a relatively low base. So it will basically be making up for all the loss that we have suffered during the coronavirus phase. Also, in a sense, if you have seen the recent FDI numbers, in the first 9 months, India has got the highest FDI ever. And if I'm not mistaken, the figure is in the range of 67 billion US dollars in 9 months, which also suggests that there is something right going in Indian economy. The stock market you have seen is hovering in the record territory, which also suggests that the people are very optimistic, because I'm told, I'm not an expert, but what I'm told that the stock market predicts the future. If it is in the higher territory, that means people are very optimistic of the economic output in years to come. So that is also a very positive signal. The third point which I wanted to mention, and I've been saying it for many years, that for businesses to succeed, if they align themselves with the priorities of a country, it makes life very easy. because the priorities of a country gives more facilitation. It also opens more opportunities. And also, I would say that the regulatory framework or the supportive environment is also tailored according to those priorities. And in that sense, I would say that budget reflects those priorities in the most or probably in the best way, because that is where, as Vikas has shared, that in the budget, 6 pillars have been identified. So in that respect, I would say this seminar is very, very important and very timely, because it will give us a very clear idea of the priorities of the government for the years to come.
So would you like us to share your presentation?
Yes, please.
Okay.
So while the slides are being put up, I'll also convey 2 more points. One, that we must be very clear, and you would have seen that government is very much determined to pursue the tough reforms. You would have seen the recent discussion, little pressure on the government to roll back some of the reforms, and the government is still continuing to explain the rationale for undertaking those difficult and tough reforms. And the second point, which also comes out in the budget, that government wants private sector to be the lead player for Indian economy. You would have seen the announcement by the finance minister for a massive divestment. That is another point. But also, more importantly, for the first time, a Prime Minister of India in Parliament has given endorsement to the positive role that the private sector has played and is playing and will be playing for growth and development of India. So all these must give a lot of confidence and comfort to the businesses in India, but also businesses abroad. You can now put the slide. Since Vikas has already talked about these 6 important pillars, I would not go into it. What I want to focus today more is that in terms of the priorities of the government, and one priority which comes out very clearly, that after having developed India's services sector, government is very now seized, is very much, I would say, determined to succeed in the manufacturing sector. And there are 2 reasons for it. One, that manufacturing will provide the job opportunities for India's very large population. But more importantly, we have seen that during coronavirus, the way current supply chains, global supply chains are organized, there is too much risk if we continue with the similar arrangement for future. And that's not only for India, but for all, for the global economic players. So there is this idea of de-risking global supply chains. And given India's large talent pool, India is in a very good spot to help the global economy and global economic stakeholders to de-risk and to diversify global supply chains. And in that context, government has taken a very determined, I would say, we started with a pilot project for what we call the production linked incentive schemes in the mobile phone sector. And within a very short period of time, India has emerged as the second biggest manufacturer. We can talk about how much is the value addition, but in terms of made in India mobile phones, now numbers in hundreds of millions today. Based on the experience, or after getting the experience from that pilot scheme, in this budget, government has really expanded the scheme to include 13 sectors, but we can actually combine it into 10 sectors. And a massive outlay has been announced for helping businesses to take care of some of the additional costs which may arise because of moving from one supply chain to another supply chain. And the subsidy which government, or the support which the government will offer, would be in the range of 4% to 6%. And the total outlay which government has announced is in excess of 22 billion US dollars. And these 10 sectors, I will just 10 broad sectors under which there are 13 schemes. One is advanced chemistry cell, which would be very critical for the electrical vehicle. That is one, and for which government has assigned outlay of US dollar 2.46 billion. Automobile and auto component sector. India is a big, I would say, manufacturer of automobile. But to take it a step further, government has announced a support outlay of US dollar 7.7 billion for it. The third is telecom and networking production sector, for which government has announced outlay of US dollar 1.6 billion. Third, I think the fourth is technical textile and textile products in the man-made fiber. As you know, that not long back, maybe 20 or 30 years ago, India was among the biggest player in the textile sector. Gradually, India has lost a lot of its production to other countries. Now, government is determined to bring it back. And for this, the outlay is US dollar 1.4 billion. Solar photovoltaic and module sector. All of you know, government of India is very ambitious renewable energy program. And that is where I believe that Netherlands can play a very important role. And for that, government has announced a capital outlay of 613 million. A specialty steel sector, very important, US dollar 861 million. And another sector which would be very important for Netherlands, sorry, food product sector is a food processing sector, for which government has announced the outlay of US dollar 1.48 billion. So these are some of the large opportunities available for our friends and partners in the Netherlands to take advantage, because some of these also relate to the core competencies of Dutch economy. Renewable energy is one in which we are also going for national hydrogen mission, and I believe that Netherlands has been devoting a lot of energy and R&D into this field. In terms of the divestment, Netherlands has some of the biggest pension funds, and you would know that government has announced a very preferential policy for investment into from the pension funds and such sovereign wealth funds into infrastructure sector, where there will be a lot of tax rebates given to these investments. And last is in terms of the port sector. And some of you might have already seen that there was one very important MOU signed a couple of weeks ago, in which one of a major Dutch company will be partnering with Cochin Shipyard to produce in India what we call the dredgers, high capacity dredgers, which will again be very, very important. So I just wanted to briefly sum up some of the key, the priorities which government has identified in a very concrete way by giving clear policy guidelines, as well as by announcing very ambitious targets in terms of where they see production going up in these various sectors, and also clearly outlining what kind of a support companies can expect if they come into these sectors. So I would stop here and would urge partners both in India as well as in Netherlands to take advantage, to study the government priorities, and to take advantage of the opportunity that these priorities offer to building India Netherlands business partnership. I'm sure that later Invest India will share more details on these matters. So with these, I once again like to thank ICAI, IDFC, Invest India, and all the participants for joining today. Thank you very much, and I wish this seminar success, not in the immediate, but I think in a continuous success over a long horizon. Thank you very much.
Thank you, sir. Thank you very much for your inspiring and enlightening words, and gives a good framework. I think it sets the frame for the rest of the seminar today. I understand that you will be leaving around 11:30 local time. So after the next speaker, I just wanted to let the participants as well know. Thank you very much for your time, and also for the fact that we're doing this all together. Let me not take too much more of your time and announce the next speaker, Mr. Debashish Mitra, CA, Vice President of ICAI. Sir, the floor is yours.
Thank you very much, Prachi, to Dr. Vikas Chaturvedi, the Chairman, ICAI Netherlands, His Excellency Mr. Pradeep Kumar Rawat, Indian Ambassador to the Netherlands, and everybody listening to me. A very, very good afternoon from India. Good morning to all of you in Netherlands. Greetings from the Institute of Chartered Accountants of India. Since His Excellency is here, let me speak a few words about the Institute of Chartered Accountants of India. Sir, we are the second largest accounting body in the world, set up under an Act of Parliament on 1st of July 1949. Sir, you will note we were set up even before India became a republic. Sir, we have now about more than 350,000 members and about 8 lakh students. And we have 164 branches in India, 5 regional councils, 40 chapters overseas. Netherlands is one of our overseas chapters. We take great pride in calling ourselves, sir, as a partner in nation building. And it was such a great pleasure listening to you, speaking about the budget. We do work very, very closely with the government of India. For example, sir, you were talking about LIC IPO. Today, as the Vice President, a note came to me from the government that about the accounting implications of this IPO of LIC, that is, they wanted our opinion on this. So we are working hard on that. And sir, you have also said about the 6 pillars. Sir, you'll be happy to note that the vaccination drive in India is going on very strongly. More than 2 crores have been vaccinated, sir, and it has been opened up now. Covishield and Covaxin, doing the rounds all over. And I'm speaking to you from Calcutta, sir. I don't know whether you have ever visited this place. And in Calcutta also, with all the privatization going on, whatever the India, in the union budget, whatever the Honorable FM has said about the health, a lot of steps are being taken because the vaccination has been opened up to the private sector also, whatever you said, sir, about the private sector. So but what we see is a shift now in the budget. For example, sir, now we have the faceless assessments. Earlier, there used to be always this talk that there's so much of corruption all over the place, and income tax is not really a place to be there. And now what the government has done is this: it has introduced faceless assessment. For example, I am an SSC and I want to be assessed, and I am under scrutiny. So consequently, all the papers that I submit will be totally in a virtual mode. And I won't even know who will be the income tax officer. If I'm submitting my papers in Calcutta, my income tax officer might be based somewhere in Delhi or Bombay. I don't know where he is based. I am just submitting my papers and getting a acknowledgement that the papers have been submitted. And if they require further details, they will provide us further details. So you see, this is a major shift in the way the government is trying its best to make things more transparent, make the system less corrupt. And let me tell you, the government has taken these kind of steps that the government has taken. It is working very well. Although many chartered accountants and those of us who are here, they sometimes feel that what is going to happen to us with the faceless assessment coming in. You see, because we were also used to going and appearing before the income tax officers. So now that is no longer there. So there has to be totally a mental shift in the way we practice, So that is, a big change that is there. The government is pushing towards digitalization in the sense that they have said in the budget, and I'm sure the other speakers will say, those of us who talk about this tax audit limit, they have enhanced the tax audit limit from 5 crores to 10 crores for those companies which are 95% digital. So if you are digitally compliant, they are saying that you don't require so many compliances. So the government is doing that. They're saying that if you are digitally compliant, we don't want so many compliances. We will totally go by self-attestation. That is, you see, if you say I have completed everything, we will obviously abide by that. So that is the change. Today in the morning, I and the Vice President, we are in a virtual meeting with the Ministry of Corporate Affairs. And please note, sir, that we are part of the Ministry of Corporate Affairs, the Institute of Chartered Accountants of India. We are part of the government Ministry of Corporate Affairs. And we were asked to give that, the government has this vision that there should be 100 big, large Indian audit firms. So we were asked to say that, what are we doing in this? And what we are doing, those of us who are chartered accountants are listening to me, we have approved in the council something called the network guidelines. That is, we are saying that if you are 7, 8, 9, 10 audit firms, and most of these audit firms are mid-sized, you can get together, create a network, and the ICI will back that network, and get bigger assignments. And in the future, when you find that that network is successful, then you can merge and create a big firm. That was also what the Honorable Prime Minister was telling us, that create big Indian firms. So today in the morning, we were making a presentation before the Ministry of Corporate Affairs about the network guidelines and how we are pushing the Indian firms to go for networks and create big firms. So those of us who are in Netherlands and who are listening to me, we are really changing, shifting. For example, the council has also passed these guidelines on MDP, multidisciplinary partnership. We are saying a chartered accountancy firm should not really be restricted to only chartered accountants. Why don't you take a cost accountant, a company secretary, maybe an engineer along with us, so that we can provide so many services under one umbrella. And we also have, a big firm which is, relevant in an economy which the ambassador sir was saying, in an economy which is really blossoming. And that if the firms, this kind of big firms can provide the services, then why not? So the institute is really doing everything possible. We know that there will be huge technological disruption. The way we see it today, it may not be there 1 year later. Artificial intelligence will take over. For example, those of us who do audit today, we do it on the basis of test checks. At the institute, we anticipate a situation where 100% checking needs to be done in a situation of audit. And because of the artificial intelligence, because of the blockchains coming in. So at the institute, we have set up this Digital Accounting and Assurance Standards Board, which is doing a huge amount of research on the impact of artificial intelligence, blockchain on the profession, and how the profession is to be geared up. What we have done, we have sanctioned recently 30 crore rupees to develop audit tools. These are all data analytics tools to be distributed amongst chartered accountants. So the chartered accountants are aware of the latest data analytical tools, and we propose to distribute this at the minimum cost or free of cost. so that the chartered accountants in India and abroad, even you will get it. Those of us who are listening to me, you are totally technologically compliant. You are totally in a position to face a changing world. A world full of challenges, without a doubt, but at the same time, full of opportunities. And that's what you see we are trying our best to do. At the Institute, for us, the three pillars, ethics or integrity, independence, and excellence are very important words. When you walk the corridors of the Institute, these three words, integrity, excellence, independence, they always play in our ears. And you see, we are going to be committed to doing that. We are going to be committed to doing that. I know I don't have too much of time. So I don't want to, I can see Prachi, you see, looking here and there. I don't know. And also, I find that he has also maintained time. I don't want to take too much of time. Here, you see, thank you very much for inviting me here and wishing all of you the very best in your future endeavors. And to Ambassador Sir here, Sir, the Institute of Chartered Accountants of India is always with the government, and we shall do everything possible as a partner in nation building, sir. Thank you, sir.
Thank you very much, sir, for these words. Thank you for your enthusiasm to bring this whole thing forward. And ICI plays an enormously big role in India and abroad today. And definitely we look forward to cooperating amongst the various organizations as well, those attending and those who are hosting it, to take this to the next level. Both special address speaker as well as our keynote speaker will not be able to stay for the next session. So, sirs, thank you once again for your participation, and leave it to you to leave when it is so required. We will then go on to the next session. The next session will be on tax updates. That will be the next session. We will have two speakers under this, Mr. Hemal Zobalia, from Senior Tax Partner for Deloitte, and Mr. Rajendra Kumar P, CA, Indirect Tax Expert and Central Council Member of the ICAI. First, I would like to give the floor to Mr. Zobalia. Just one point of order, we will, within the 15 minutes that they have to present, we will also take 1 or 2 questions. So for each speaker, when we're at about near 10 minutes, I'll just do a little sign just so that you know that there's a little bit time left for 1 or 2 questions. Mr. Zobalia, the floor is yours.
Thank you, Prachi. Thank you. Good afternoon, His Excellency and other honorable members who are speaking, and participants. It would be a bit of a challenge, Prachi, to combine everything in 10 minutes. But what I'm seeking to do is, talk about few important things, that will be relevant for our participants on this call. Now, unlike earlier budgets, this time the government had announced a lot of measures during the COVID pandemic. So in the sense, there was a reduction in the tax rates already announced middle of the year. So to that extent, the budget per se did not come out with any big bang announcements. But at the same time, what is important is that they did come out with certain processes as well as clarifications which were helping the businesses. There were certain cases where the onus is put more on taxpayers, which I'll discuss. But in essence, the industry and the stakeholders were frankly expecting that maybe there will be a new type of tax, or let's say a COVID cess, to fill up the tax revenues. But the government had done well to not impose any such tax. And therefore, a lot of people who are in India would know that we witnessed a great surge in the stock market post the budget, because it was a big relief that there was no additional tax. So the key point that came up importantly, like I mentioned in the top left, there are no change in the individual or corporate, which is a good sign. Just for some of the participants, so the general rate for corporate tax we are having is around 25%. And more importantly, if you decide to set up a new manufacturing company in India, if you are expanding, then the good news is the tax rate is as low as just 17%, and it's really competitive. So that's something that you can ponder about. One important change that is done more in the context of employee contribution. What a lot of times we had seen that, from the salary, there is certain contribution that the company deducts and then pays to social welfare like provident fund. That was noticed that, companies were not paying that. So indirectly, they were actually using uh, employees' money. So there is a change that, you need to ensure that it's paid in time. And importantly, this change is valid for the current year, i.e. FY 2021. So what it means for quite a bit of companies in India is that, a lot of times those due dates are missed, at times inadvertently. So you could possibly get your processes right, because if you don't deduct and pay in time, you would lose the tax deductibility of the same. The other important change was done in relation to goodwill. Invariably, we had seen a lot of transactions happening by way of, say, mergers, and there would be goodwill that is generated. And in essence, earlier on or so far, goodwill was eligible for depreciation at the rate of 25%. It was characterized as an intangible asset. But now the law stipulates that, it won't be considered as an intangible asset or capable of depreciating, but that will be considered as cost of acquisition. So at a later date, if you do sell the brand and any goodwill that is generated, you can get it as a cost of acquisition. What it really does for a lot of companies in India is that it really limits your ability to claim, because essentially if you buy something and you pay goodwill, it's not that, you have your mindset that it will be sold after 2 years or 3 years. You will actually end up or not end up selling at all. So to that extent, whatever amount that you would have paid would be something that's not eligible for tax deduction. Again, this is applicable for the current year, but a lot of companies where we as Deloitte are involved are actively looking at, is there a way, rather than it being characterized as goodwill, can we actually characterize the underlying nature? In a lot of times there are business assets. If you procure something, historically, frankly, because there was no name given, we simply put it as goodwill. But now possibly what one could do is look at the underlying nature and see if that some of it can be categorized as business assets or business rights. One important change that virtually everybody is talking about is on equalization levy, and it impacts, for example, Dutch companies who are operating in India either directly or through their subsidiaries, is on the equalization levy. And this is, of course, emanating out of the BEPS action plan. So, the intent started with the foreign companies or e-commerce operators who operate outside India, and they are selling goods or services in India. So this was mooted by OECD, and there was a concept like equalization levy, and India introduced it. Importantly, what happened is that they defined e-commerce operator, and then the second limb was the e-commerce operator should provide online goods and services. The second limb was not defined or clarified adequately. So if you see the bullet point on the left, that first one, they've gone ahead and defined it as to what does online sale of goods and services mean. And interestingly, if you see, it's worded very widely. Any acceptance for sale, offer of sale, placement of purchase order, payment of consideration. The moment you fulfill that, it's considered as online activity. Now, in today's time and age, possibly, you're not going to actually send a check over. All the payments would happen online. So the moment the online payment happens, then it would fulfill the definition of online sale of goods or online sale of services. Now, to my mind, it's very far reaching. And therefore, yes, there has been representation made, but I feel it would apply for all the Dutch companies who are operating in India. Interestingly, a question came to me that, Himal, is this only for the e-commerce operators, a la, a lot of these they operate and buy and sell goods. The question is, it could be, we were analyzing a case, it could equally apply even for normal headquarters companies. Let's say their headquarters are in Netherlands, you operate, you provide management service. And what we see in management service, usually there is a request goes, there's even internal portal. So if the definition of the e-commerce operator is if you operate or own any platform, electronic platform, that qualifies as an e-commerce operator. So when we get down to analyzing, mostly all the Dutch companies would be providing some level of management support to their subsidiaries in India. The question is, if that is taken through certain portal mechanism, then it is something that could be liable for equalization level. Now there was a bit of a doubt how the interplay between royalty and FTS and equalization levy will take. The rates are different. At equalization it's 2%, whereas there it's 10%. But it has been clarified that they would look at it first, because the revenue authorities would get more revenues if it's royalty or FTS. So they would look at it, if it doesn't fall under that royalty definition, then the equalization levy would be applicable. But to my mind, this is an important change. All the foreign companies who are doing business with India are actually very actively looking at what is the implication, how will they comply with this particular levy. The third slide that I thought I'll discuss is on the dispute resolution. A lot of non-residents who do transactions with India actually go ahead and take what we call as advance ruling. It is given by the Authority of Advance Ruling, called AAR. The government took feedback from the various stakeholders, and there was a feedback that it was taking far too long for the advance ruling to give a verdict. And essentially because it had to be presided by a chairman who was a retired Supreme Court judge. And quite a few times it was that position was left vacant, and therefore the normal conducting of the AR was not happening. So they have revamped the ministry has looked at the feedback, and therefore they have revamped it to now what is called as Board for Advance Ruling, where the people who can fill that place is a lower threshold, and therefore to that extent there will be a smoother functioning about it. So in a way it's a good sign, and we would expect a quicker turnaround. As you see, there are strict deadlines, okay, in terms of ability the orders would come in, okay. Dispute resolution is something that has come out for small taxpayers. The idea being that the forum is that if you are unduly some penalty, then this committee can look at it, waive your penalty, grant immunity, but essentially it's for small taxpayers. The last one is on the faceless tribunal. We already heard in the earlier session about the faceless assessment. And the idea is now to take it to the next level, that even at the appeal level before the tribunal, even that is expected to be faceless. I think it's a big step that India is taking. Though the timeline here is mentioned as I've indicated till 31st March 2023. But just to put that timeline itself is a big step. And I think it's really going through a paradigm shift. We haven't heard about ability to argue only online and faceless, but I think it's a big step, and India is taking a lead on it.
Himal, just a quick point that we are now over the 10 minutes. So just to give you a support.
Sure. Yeah, I'm on to my last one. Yeah. And the last, I wanted to speak just about a couple of minutes on, interestingly, in order to widen the tax net, the government has introduced a withholding tax, or TDS as we call them, on all purchase of goods. Which so far it was essentially on services or work contract, but now for all purchase of goods. So what it means is, for all the companies in India, the subsidiaries, you need to actually, as I've written on the right-hand side below, you need to actually get your control system in place and ensure that the TDS is deducted. And again, in TDS, there are different rates if the opposite person thresholds. also whether they are filing returns. So in fact, the rates increases if they don't have a PAN. So to my mind, again, this in terms of, there may not be any tax outflow, but in terms of the compliance burden on some of the Indian companies would increase. And the last point that I had was more in the context of the assessment and the reassessment time limit. The government is taking an active steps to reduce the time frame. So by approximately across all categories is around 3 months and kind of shorten that place. So with that, I kind of open to any questions that you may have.
Hemal, thank you very much for a very clear presentation and also very detailed points that you brought up, I think, which are very relevant for the Dutch companies. Before I take two questions, I just want to let people know to ask the questions in the chat. And we have one question up, which I will ask in a second on behalf of the person. And secondly, we will be sharing the slides with everybody so that for those who have required that in the long run, they will be getting them. So the first question that I have for you, Hemal, is from Ms. Sapra. Can you also share some special direct tax provisions for startups that India has in place?
Yeah, so India has a very clear policy of encouraging startups, and frankly, as against the general stated policy that we want to move away from giving exemptions, India has retained benefit for startups, and in essence, the startups could actually have tax exemptions in a block of 10 years for 3 years. So it depends on when they want to avail it, because all startups don't start making profit early on. So the idea is the government is giving you that leeway in a block of 10 years. If you're making more profits at the latter part, please claim it during that latter part. Just one more point, it's because it could be misused, because everybody could say, oh, I'm a startup, and start claiming benefits. There is a few conditions that you need to fulfill, including a registration. So that's one area, that it's not startup that every other company can go and avail. You need to fulfill certain conditions.
Okay, thank you. Does that answer your question, Ms. Sapra? Okay, thank you. That was the questions that we had. So Hemalji, thank you very much for your presentation and for being here with us. I understand you also will not be able to stay for the entire session. So we go now to the next speaker, Mr. Rajendra Kumar P. for CA, indirect tax expert, Central Council member ICI, and he will be speaking on indirect tax changes in the budget. Same for you, sir. At 10 minutes, I will just give you a quick heads up and then we continue. The floor is yours, sir.
Thank you.
Dr. Vikas Chaturvedi ji, Madam Prachi, all other esteemed speakers of this particular wonderful session organized by the ICAI Netherlands, ICAI chapter of Netherlands, then India-Dutch Financial Corridor. It is my proud privilege to speak to all of you. In fact, up till the pandemic, every year, 3 times I would be minimum in Paris, participating in the OECD's meetings. And last year, unfortunately, I could not be there present in person. And we had a very, very less number of meetings. And today, when I'm here before this iPad of mine and talking to all of you, I get a feel that I'm in Europe. I'm in a very famous destination, Netherlands. I have many friends who are Dutch as well as who are Indians. One is Dr. Vikas in Netherlands. And I've had a very close opportunity of working in the indirect taxes sector of European Union per se, including the British who just left the European Union. The indirect taxes structure of the European Union, of which Netherlands is a part and parcel, and the Indian GST are no different, let me tell you. Let me first remove the myth that we are different, we follow a different law, There are a lot of changes that happens in India, a lot of amendments that happen in India. No. India is a part of the OECD's observer nations. India is a part of the steering committee of the Working Party 9 with respect to the consumption taxes, and me from India is on the technical advisory group to the Working Party 9 on consumption taxes. Now, in this scenario, esteemed friends, I have had the close opportunity of working with member countries of the OECD in implementing, or rather in structuring sometimes, in advising, and also reviewing the guidelines of the OECD with specific reference to consumption taxes. The principle of Indian GST, the manner in which the Indian GST setup is constituted with the GST Council, and then you have the central GST and the state GST, is more or less similar to the European Union's VAT Council and the various VAT related regulations which are there in various countries of the European Union, and the changes that happen in the European Union through the VAT directives is what we call as the GST notifications in India. GST is a consumption tax. Any consumption tax for that matter is dynamic in nature, is flexible, never static. It is a tax which changes with the economy of the country. It is a tax which keeps pace with the changes that happen in the financial sector, in the financial stream of the government, in the financial canvas of the government. And it is a tax which is used as a political tool to control or to come to power. It is also a tax to implement the social security measures in a particular country. Since 2017, July 1, when GST was implemented in India, 3 years down the line, we have had hundreds, if I may quote, about 1,000, close to 1,000 amendments that have happened in this taxation structure, whether it is in rate, whether it is in the payment of taxes scenario, whether it is in filing of returns, and so on. In fact, each month is a budget month as far as the consumption taxes like GST in India is concerned. The GST Council meets, the GST Council debates, the GST Council deliberates and recommends to the government the changes that are required in the regulations, in the provisions of the GST law in India. So it is not one union budget in a year which encompasses the GST regulation in India. Each month the GST Council meet, like the VAT Council of the European Union. Each month notifications do come in and do go out, like the VAT directives of the European Union. And there are numerous rates. The rates of taxes vary from 0, 3, 5, 12, 18, and 28. It is not one rate of tax as it is there in the United Arab Emirates or in Singapore. In fact, there's no comparison for these nations because India is such a huge and diversified nation. I always call India as a world. The challenge which the Indian government had before it, prior to July 1, 2017, was the implementation of GST, given the federal structure of the country. And when we implemented GST, we called it cooperative federalism displayed at its best to the world as to how such a diverse country like India can converge to one single law, one legislation as far as consumption taxes are concerned. Even in the European Union, my esteemed friends, I have come across variations. I have come across deviations. I have come across tussles, whether a VAT directive should be implemented in the manner in which the EU has formulated it, or a particular country has the leverage or has the flexibility to amend. In that scenario, esteemed friends, the Indian GST structure did undergo a change, not a big change, a fair amount of change in this union budget also. There was a certification provision by chartered accountants, which stood removed But then the institute under the presidentship of Nihar Bhai Jambusaria and Vice President, who just eloquently spoke now, we are doing our best to impress upon the government that the concept of maker and checker should not be given a go by, given the fact that India is a nation where the tax gap is fairly large than the European Union's tax gap. Friends, and there were also changes with respect to the input tax credit. In fact, input tax credit is the very foundation of a VAT, is the very foundation of the GST. And I mean, every country, every nation, about 150 odd countries which implement the VAT or the GST in the manner in which the OECD has formulated, in the manner in which the OECD wants the countries to legislate, will find that the input tax credit has always undergone changes. There have been restrictions placed. There have been roadblocks in the taking of input tax credit. Similarly, the input tax credit structure in India also has numerous restrictions. It is not so easy for a registered person to take a credit. In fact, in India, if the person has not paid the taxes, there is a supplier, there is a receiver. If the supplier has not paid the taxes, the recipient cannot take the input tax credit. It is incumbent upon the supplier to pay the taxes. Only then the recipient can take the credit. This provision you may not find in many countries of the world, given that it is a government which is empowered to collect the tax. It's the government which has to ensure that the taxes are paid. Friends,
sir, just to let you know that we're on the 10-minute mark. So go ahead.
Yes, thank you so much. I was about to conclude, madam, in just 2 minutes. In fact, I had an opportunity to come to Malta about 4 years back, and I was speaking in the Malta Institute of Management's International Conference on the importance of VAT in the emerging economies. And I found in the Maltese legislation on the input tax credit, you had entertainment, leisure, and amusement. What I found very interesting was in one of the cases, I think it was in entertainment, where the Maltese law allowed input tax credit. In amusement and leisure, no ITC was allowed. But if you look at these three, entertainment, amusement, and leisure, they don't look so different. But then on paper, in law, they are different. And the Maltese legislation did allow that. I don't know the current position now. So even in the Indian tax scenario, there have been changes which have been happening in the input tax structure, in the input tax credit. There have been changes which have been brought in on the GST procedural front, in the compliances front. Quarterly return filing has been introduced. One single return is being contemplated over the period of maybe next few months. The payment of taxes is staggered, given the fact that the pandemic was forced upon the humanity by act of nature, or whatever you may say. So the Indian GST has been a challenging experience. And all of you in Netherlands, let me tell you that if you have understood the Indian GST, if you have an opportunity to work in the Indian GST, and if you have mastered the Indian GST, it's easy for you in any part of the world. Thank you very much.
Thank you, Mr. Kumar, for this lovely explanation, especially the last remarks. I think it does take a lot of mastery to understand how the system works, and definitely you've definitely given us a good view into it. There's one question here in the chat box which I'd like to ask you with your permission. Deepa KP has asked the question: any impact of export taxes because of Brexit?
In fact, I presume that she is asking me this question in the Indian context and not in the context of European Union and the United Kingdom. Yes, Deepa madam, let me put it like that, it is not that India wanted ever Brexit to happen. It is the internal affair of the European Union and the United Kingdom, government of United Kingdom. But then when it happened, the Indian industry just look upon a very big opportunity, especially in the European Union. The agreement between the Indian government and the European Union, for reasons best known, is still delayed on the trade and on the tariffs and so on. And we hope that the agreement gets signed very soon. It's been years now since the discussion is going on. India does view the trade with the European Union with all positivity. And I'm sure that in the coming times, given the quality factor being given extreme importance, and the Make in India tag being promoted with a lot of push and thrust by the government of India, I'm sure that India will turn around as far as the exports to Europe is concerned. And many companies are now opening their shops or offices, I may say, in India. And we look forward to working with the EU very closely in the time to come, as it has always been, if not more. Thank you very much. Madam, you're in mute. You're in mute.
Yes, sorry. Thank you very much for your the answer of your question, and thank you very much for your presentation. We now would like to continue to the next section. This is the FDI regulatory and policy framework that we will now be discussing. That will start with a presentation on the ease of doing business in India by Ms. Varda Taneja, Senior Assistant Vice President of Invest India. Varda, the floor is yours.
Thank you, Prachi, and thank you, everyone. I think the discussion that took place right now on some of the regulatory changes announced in the budget was, was very interesting and very rightly pointed out by in the previous session about, how our tax regime is being constantly looked at, revised on a regular basis. Policies are being reviewed at the central and state level to ensure that there is complete ease of doing business, and then parity is maintained, rates are being rationalized across all product categories time and again. So I will just start sharing my screen for my presentation. Prachi, just let me know once it's visible.
Will do. It's yes, the screen is visible. It's just not on full screen.
Just a second.
Yeah, there we are.
Yeah, is that full screen?
It was, and then it moved back.
Okay, if it's all right, I will continue like this.
Yeah, that's fine. That's fine with us. It's up. Yeah, this is fine. This is also full screen. Go ahead.
Right. So, I will focus a little bit more just on the ease of doing business part, but I would like to start with telling the world and telling all of you a little bit about where India stands right now in the world, right? The entire world currently is looking at India to drive global growth. It's pretty much emerging as one of the world's economic powerhouses, especially in this post-COVID context. In a span of a few years, India has become one of the fastest growing G20 economies and is number 3 economy by PPP. We have the second largest number of internet users, startups. We are truly paving the way for future growth. So, the pace of India's growth is actually evident with the fact that we are adding $1 trillion to our economy every year. It took us 63 years to become a $1 trillion economy and just 10 years to add the next 5 trillion. So honestly, it's really no surprise that we expect this economy to become like the 3rd largest economy in 2030. So what is really, setting us apart? What is setting us apart is all these different segments in our economy, which are driving some of the big growth, right? So we're a unique market, not just in terms of size, but also the growth of this market. So while in other countries, maybe in a US or a China, you see absolute numbers in terms of the size of the market. But what is unique in India is that the rate of growth of these markets is much higher. So, like, for example, if we take the case of consumer durables, it's growing at a 3x, global growth rate. Another interesting part about India is what makes it very attractive is the fact that it has a large and young workforce. From 2019 till 2030, India is adding 100 million people more to its workforce, more than any other country, a workforce which has a median age of 28 years, which is even 10 years younger than the Chinese population. And this workforce is actually very, very highly skilled. technologically advanced. We have the highest number of science and engineering graduates every year. We have the second largest English speaking population. We have manifested India into becoming the preferred destination for new age technologies such as AI and digital. In fact, a lot of European companies, including those which are Dutch, have found home for their technology and R&D center, being supported by India's commitment to sustainability. So we are growing at a breakneck speed, and we are not forgetting our commitment to sustainability. Solar and wind energy capacities have more than doubled in the past few years. Multiple initiatives have been taken up and implemented by the government to increase and improve the standard of living for all the Indian citizens. All of these things, of course, have made India as one of the preferred destination for global investors. And like Ambassador pointed out, in his opening remarks as well, while global FDI actually fell by 42% in 2019, FDI in India rose by 13%. India was actually an outlier globally. And that's how we kind of drove this, $67 billion plus of FDI into the country till December 2020, which is almost a $10 to $15 billion increase from the same time period in the previous financial year. And why is that so, right? We have been literally rolling out, the government of India has been rolling out a red carpet for foreign investors. We are working very proactively on improving the business climate. This is evident from the improvement in the World Bank Ease of Doing Business ranking. We have simultaneously also improved on the Global Innovation Index and on the Logistics Performance Index as well. So what is this that is really improving the business climate in India, right? So how we look at it is that we see that the government of India has taken a sort of a three-pronged approach to accelerate investments in the country. We're working across three pillars. So we're working on improving cost of doing business, ease of doing business, and the risk of doing business. So while each of these pillars has many and multiple reforms that are taking place under it, I'll touch upon some of the most important ones which we feel have been very relevant in today's time. So if we start with the cost of doing business, there is the National Land Bank, which has been introduced to, enable hassle-free land acquisition. Data of 3,000 plus industrial parks has been mapped out. It has land, amenities, other auxiliary inputs that are required. Further than that, India has also improved on its cost structure. We have one of the lowest corporate tax rates amongst all competing geographies at 15% and 22% for existing investors, 15% for new investors. So with that, we have actually improved our corporate tax rate as well, reducing the cost of doing business significantly. We have had a razor sharp focus on business process simplification. This is where ease of doing business comes in. So there's a full department which is focused on looking at ease of doing business regulations on a day-to-day basis. They work in a hub and spoke model with all the central ministries and all the state governments on looking at different processes, policies, etc., which can be simplified further on an ongoing basis to ensure ease of doing business for the companies, which could range from inverted tax duty structures, inverted import duties, or GST structures which need refinement, other procedural and compliance and regulatory bottlenecks that are being faced by the companies. In fact, one of the biggest reforms implemented in ease of doing business has been the introduction of the GST, which has led to a massive reduction in the manufacturing and logistics costs for companies. There has been a removal of interstate checkposts. It has cut travel time by 20 to 30%. And furthermore than that, there are actually a lot of labor reforms which have been introduced at the central and at a state level as well. In fact, the state governments are taking a pioneering lead in introducing and simplifying labor regulations, introducing flexibility in their labor laws, understanding the seasonal nature of many industries, allowing greater hours of work across the genders, and making this whole process a lot easier for industries to operate in. And what is also interesting along with that is the stability that companies face with a lower risk in risk of doing a business, right? So India is the world's largest democracy with competitive federalism right at the core and the root of its being. These strong democratic institutions which are existing in India ensure a very low risk of doing business for companies over here. We have had more than 600 million voters, 100% of those who voted through EVMs in our last election. And that is what, really reverberates the sentiment in the Indian population and the Indian citizen. So this, of course, all of this is being supported by a very robust infrastructure, which is also further adding to the ease of doing business for the country. It is also well positioning India to help it meet its export needs. So we are enhancing our position as an export hub for companies to operate in. We have very well efficient and well connected ports, railways, roads, network, and have a very competitive medium time in ports, and a very large rail network and a road network which is supporting this as well. In fact, the government of India is investing a $1.4 trillion in infrastructure development in the next 5 years, and that includes a lot of projects under highway and road development under Bharatmala, port modernization under Sagarmala, airports under the Udan initiative. So all these different infrastructure projects are being undertaken only with the effort to support the companies and leading to further easing of business in the country. All of this is definitely going to completely transform the entire logistics landscape of the country. We're looking at an improvement in cost, ease of doing business, say a 5 to 6% decrease in logistics costs, 20 to 25% increase in average speed of road network, and definitely almost 100% increase in port handling capacity with the kind of investment that is being made in infrastructure in our country. So, and we already see that, in this post-COVID scenario, we see the green shoots have started appearing already. We are the second largest manufacturer of PPE in the world, which we achieved literally in the first 60 days of the lockdown. And we have reached pre-COVID levels from a lot of our industry, manufacturing and production outputs. And that is a positive sign, of course, right? As India is, getting back in its track, and, the number of cases are relatively low. And what we're looking at right now is a large vaccine drive, which is being implemented across the country, which a large part of the population already getting vaccinated as we speak. And in summary, we look at across all the sectors, India is offering this $5 trillion opportunity to the global investor community, which, especially the Dutch investment communities, the European companies can really take advantage of. And we have seen that with, the Dutch investment being the fourth largest investment being in India. And there are pioneering companies such as, Shell, Unilever, Philips, been here for years and years at a stretch and doing such amazing work over here. In fact, it's really interesting and heartening to note that Philips R&D Center in India contributes to 20% of their global resources for high-tech software. If I was to come to, just focus on some of the key points around the budget, which were focusing on one is...
But just to give you the 10-minute warning, that's all. Let's go ahead.
Now, I'm going to wrap up wrapping up in a couple of minutes. Thanks.
Okay, thank you.
All right. Just want to highlight some of the points which came up in our budget, which promote investment facilitation and ease of doing business, and new and actually open segue for new investment opportunities for companies. I would first want to, of course, touch upon the introduction of the PLI, the entire budget that was allocated to the production incentives across all the 13 sectors. 3-4 of the PLIs have already been announced, and companies are already starting to apply for this. There is an 4 to 6% on incremental sales. This, of course, is a big boost to investment and will also cut down the cost and make businesses very competitive globally, to source and manufacture in India. There have been different, things that have been introduced at a sectoral level as well. I won't go into too many details, but happy to share this presentation with you at the end of the session, so that you can go through them as well. But like what was said by some of my other colleagues on the previously in this session as well, there's been a lot of mission of easing of taxes, compliances, easing of FDI limits, allowing tax exemption to investment division for foreign banks located in IFSC. There's more leeway for companies which are going to be, investing in R&D and improving on innovations over here. So just want to put this out there for people to look at, and we will of course share this with you at the end of the session as well. And I would urge all companies who have any questions or clarifications that they seek on their India market entry or facing any issues in their India operations to reach out to me at Invest India, either through Prachi or through our embassy, our mission in The Hague, which is working very closely with us on facilitating foreign investment and Dutch investment specifically in India. Thank you. Happy
Mr.
to take up any
Neja,
questions.
thank you very much for a very thorough presentation. It's very nice to see also the impact that's already there in the Dutch scene. I think you've covered the real landscape, and your sheets ask for more. So I'm sure people will definitely delve in them into detail and have questions afterwards. Then good that we can reach out to you in more than one way. If there's any questions in the chat, I haven't seen them yet. Then I will take the liberty to ask one question, if I may. Given all these big changes that are taking place in India today, and given your knowledge of the Dutch market, is there any one specific thing that springs out for you that you would say, well, to highlight out of the different points you said, that you would say 1 or 2 points which you would glad to bring up? You want to highlight further? Thank you.
Yes, definitely. So I think, Prachi, one of the things that the Indian government is really, really focused on has been around localization and Atmanirbharta, right? Like that's been the buzzword that has been going around in the Indian government for very long. Along that, we've seen the implementation of many reforms that have taken place, which have been taken in a very negative manner by the global investor, whether it be around trade barriers or tariff barriers, introduction of quality control orders, etc. But I think that I just want to showcase or maybe portray the viewpoint of the Indian side, that I think the messaging may not have been correct for you to understand this. So quality control standards are a right of every sovereign nation, and introducing this has been a part of the process to only make our manufacturing at par with what is going on in the European side, right? In fact, most of the standards, if you see, that have been introduced are actually pretty much a copy paste of what is going on in the US or in the Europe. So we're just bringing our standards at par with everyone else. And the idea to do this is so that we can make ourselves more competitive to serve your markets, so that India can become not just a local market to take advantage of, but also a location for you to source better, 1, and 2, to export from here to your other global markets and their needs as well. So it's only with the introduction of these measures can we see a long-term perspective for European companies to look at India with a longer-term commitment than what they have been doing so far of just a last mile assembly. What we're looking for is a more going deeper down the value chain, localizing more components, increasing the levels of localization, and serving the markets better.
Thank you. That's a very clear answer, and it is definitely one of the points.
So I think that is a message.
Yeah, thank you very much. Thank you very much for the detailed reply. We now would like to go to the last speaker, last but not least, very important as well, Mr. Aman Jha, Advocate Supreme Court of India. He will speak on the regulatory and policy guidelines. So before I yield the floor, I'll do the same thing. At about a 10-minute mark, I'll also give you a little flag, and the floor is yours.
Well, lawyers have this knack of getting reminders from their judges that Mr. Counsel, you just must wrap up now, and then we keep on asking for more time. So I hope I'll get that benefit over here as well. In any case, to start with, Dr. Vikas Chaturvedi, Ms. Prachi Kulkarni, Mr. Debashish Mitra, Shri Rajendra Kumarji, and Ms. Varda Tanejas. It has been quite an enriching conversation so far. Particularly, Mr. Mitra pointed about that use of artificial intelligence in assessment. I don't know how the legal fraternity would react to this, or rather respond to this in India or in the world to this. Anyways, I'll leave it for the next time. So it is a pleasure to address this gathering of such eminent people and domain experts in the field of taxation on a topic which is very relevant, particularly due to the changing geopolitical dynamics after the COVID-19 crisis. The world, particularly the West, has perhaps realized the importance of diversification and resilience of supply chains. It goes without saying that trade and geopolitics are intertwined, and that drives the world order and for future directions of global affairs. Now, let me cut the chase and come to the real point as to why discussion on FDI and India's regulatory and policy framework would be more relevant in a post-COVID world. For decades, China has served as the go-to manufacturing destination for global companies. However, the tides appear to be rather changing now. For instance, Foxconn now plans to invest about $1 billion in India. Hasbro, the world's largest publicly trading toy maker company, plans to diversify about 50% of its manufacturing unit to India and Vietnam. And this is rather true for all the major corporations of the world. Perhaps there's a realization that too much of reliance on China as a chief manufacturing hub not only has its share of rigid risks, such as disruption of supply chains, but even reputational damage. It won't be an overstatement to say that the most valued commodity in international relations today is that of a trust. The importance of Indo-Dutch cooperation can be gauged from the fact that this dates back to rather about 400 years, if I'm correct, Dr. Vikas?
Yes, absolutely.
Yeah. The Dutch consider India as a priority country for economic engagement. India at the same time also sees Netherlands as an important source of FDI and expertise as well as technology in our priority sectors and flagship programs. India and Netherlands have identified potential collaborations in areas such as water management, infrastructure, logistics, ports, highways, inland water transports, and many such areas. In fact, we have been discussing exploring the possibility of science and technology cooperation on a triple helix model, if I'm right. That is between the two governments, the private sector, and the science institutes. That is a three helix model. It is in this background that we should analyze the importance of regulatory and policy framework for foreign direct investments. I shall take you through a small presentation on FDI policies in India and web of concomitant compliances associated therewith. So I'll just share the screen. I'm a bit old school and technologically challenged. So in any case, I'll just try. Okay. So.
Yes, you're on. We can see you. So,
is it visible?
Yes, it's visible.
Okay.
And now we've got a full screen.
First, I start with, after the initiation of the first phase of liberalization in 1991, we have gone from strength to strength, and we have today emerged as one of the fastest growing economies. The S&P pegs us as one of the fastest growing economy with 10% growth rate in the next fiscal. And if I may correct myself a bit, like Ambassador Rawat pointed out, that OECD has said about that 12 to 13% of growth it has predicted for India, OECD. The United Nations Conference on Trade and Development's World Investment Report puts India as the 9th largest recipient of FDI in 2019. Perhaps we are fulfilling all the requirements for attracting FDIs, be it in terms of stable political and macroeconomic environment, or developed communication and transport infrastructures, or qualified and productive workforce, diversified exports, market size, and so on and so forth. FDIs in India is regulated by basically three agencies. They are SEBI, that is the Security and Exchange Board of India. Then we have Reserve Bank of India and the DPIIT, that is Department of Promotion of Industry and Internal Trade. Now there are three categories under which FDI is permitted in India. The category one is the automatic route. That is, in this route, the non-resident investor or the Indian company does not require any prior approval from the government of India. The second is the government route. Under this route, approval from the government is required, and this is given by the respective administrative ministry or the department. The third category, as we can see, this is a mixed route. As this name suggests, it is partly under automatic route and beyond a threshold require approval from the government of India. Then we have the prohibited sectors. They are either the strategic sector as per the country's own assessments, like Netherlands has telecom sector classified as a strategic sector, as I see. Recently, we have seen geopolitical maneuvers when it comes to using Chinese technological equipments, particularly in 5G equipments. Moving on, we see the procedure associated with the FDI. I'm just going through all the procedure and the requirements step by step. Subsequent to the abolition of the FIPB in 2017, that was a Foreign Industrial Investment Promotion Board. The work of granting government approval for foreign investment under FDI and FEMA regulations has now been entrusted with the concerned administrative department or the ministry. The DPIIT oversees the applications filed on portal and forwards it to the concerned administrative ministry. Then there's an additional layer of scrutiny for proposed investments from Pakistan and Bangladesh. Investment from these two countries also require clearance from the Ministry of Home Affairs. For proposals involving FDI exceeding about $775 million shall be placed before the Cabinet Committee of Economic Affairs, who shall give the requisite approval. As a standing operating procedure developed by the DIPP in consultation with the concerned administrative ministries, the whole procedure takes about 8 to 10 weeks. That the whole FDI procedure takes about 8 to 10 weeks in totality. Now I come to the startups and the FDI, because startups have been lately in currency in the world as well as pursuant to the Indian economy. The Indian startup environment has been thriving in the last decade with the emergence of new ideas in this domain in particular. Majorly, the startups depend on foreign investments, and the government has been making all the right moves to make it investor friendly. Currently, 18 out of 30 unicorn companies of India have major foreign direct investments. Startups are specifically recognized by DPIIT subject to fulfill of certain conditions. Recognition, as was rightly pointed out by the previous speaker, that recognition of startup is value-based and discretionary, because notification says in broad terms that if it is working towards innovation, development or improvement of products or processes or services, or if it is a scalable business model with a high potential of environment generation or like for wealth creation. According to our FDI policy, startups are allowed to raise about 100% funds from SEBI registered foreign venture capital investors under the automatic route, and they can invest like at a price mutually agreed upon the parties. The major Indian startups like Flipkart, Snapdeal, Ola, Zomato, Swiggy, Paytm have all majority foreign stakes. So I think in this particular area, the Dutch companies can particularly have a say. In the e-commerce sector, in the B2B and marketplace model, 100% FDI is allowed under automatic route, while the FDI is not allowed in the inventory model, wherein ownership of the stock is exercised by the marketplace. Further, if 25% of any vendor is from a marketplace entity, then such business shall be inventory-based model. To get away with this rule, vendor entities have been like creating multiple entities. So entities have equity participation by the e-commerce entity, not allowed to sell products online, but companies have simply reduced their equity stake and they continue on selling on the marketplace. So this shows that there exists a difference between implementation and existence of conditions attached to the FDI. This can be called as a perfect example of like what I have mentioned as legal maneuverability within the laws. Now, what are the penalties associated with this? Because it is very important to flag the penalties associated with them. Now, for the violations, penalties have been prescribed under Section 13 of FEMA, which is thrice the quantifiable amount, which is otherwise like 2 lakh rupees, Indian rupees. However, the silver lining is that they are compoundable in nature, like the penal provisions can be compounded by the mutual understanding of the parties. Now, once the companies, they come for the FDI, what are the post-FDI supports that the companies who have been investing in India, they can get? Like once the FDI application is approved and the money is brought into the concerned entity, the post-factum legal compliances begin. Like these are in terms of compliances with regard to various conditions attached with the FDI, maintenance of statutory registers and periodical compliances, post-incorporation changes in a memorandum of understanding and articles of associations, due diligence report, end-to-end litigation support in various forums, legal assistance in mediation and other forms of ADRs, legal assistance in HR employment issues, commercial contracts, and particularly the IPR registrations and IPR protections, because we have seen there have been a lot of controversy regarding TRIPS, because India has been a signatory of the WTO TRIPS. So there has been a lot of controversy of late. So what can be provided is the IPR registration, diligence exercise, market investigation, surveys, and filing of applications.
Mr. Jha, just to let you know that you're at the 10-minute limit. And
yes. I'll just finish in a couple of minutes. Okay. In just 1 minute. So legal assistance in terms of franchising, licensing, brand protection, and development, then also technological transfer and assignment, etc. So this is the long and short of the regulatory and policy framework in terms of FDI. So I think I have concluded before my allotted time, Prachi. And I not ask more time.
Yes, well, that's amazing, right? After the introduction you gave as a lawyer. So I must say we're very thankful as we were running out of our time frame. If there's any questions, please place them in the chat. The presentation you gave was very, very vivid, and especially the breakdown on the FDI. I think it's very good for people because they always sort of, people see it as one big thing, and it's very nice to actually see the various structures. As there is no question in the chat currently, there's something coming up. I hope that's no, that's just a general conversation.
You can direct any question if it comes. You can direct any question.
Okay, thank you very much, because that's one of the questions they did ask. I generally answer for speakers unless they ask themselves. I said no, but if we have specific questions, we will definitely direct them to you in that case, either us or the embassy or Invest India, or whoever receives them. So thank you very much for your presentation, and I would like to proceed to therefore then round up the session and the entire webinar. Thank you one more time. Ladies and gentlemen, Your Excellencies, distinguished guests, we have come to an end and close to this session today. We're very glad to have seen upward of 90 participants during this session coming in and out. So, and I'm glad that each of the speakers were able to get through their sheets and very vividly. We will share those as we have promised. We'll see how to get it to you, probably through social media initially, because we did not get everybody down as a registration this time. It was rather an open registration. So please watch then Vikas and my LinkedIn or tweeted accounts, because we will probably put it out there in that or from Invest India or the government. So we'll see in which form we will do that, but we will get it out there to you, all of the presentations. And furthermore, I'd like to thank on behalf of the speakers and on behalf of the organization committee that thank you very much for participating from all the institutions. All institutions, all 4 of them, are available for further questions, queries, in any which form. If you get it to one of us, we'll get it out to the other ones if it is a specific question relating to a specific area, and they are there to help for the next steps where we're doing business is concerned. So in any which way or form, please don't hesitate if you have a question. That's where we're there to help you. Furthermore, we'd like to really thank all the participants for taking the time, either out of your morning or out of your afternoon, which is being very, very fruitful that you came in such numbers. And if there are any questions, please proceed to get in touch with us. And by this, I wrap up this seminar, although I see somebody with a hand up. Mr. Apurva C. Yeah, let me just give you the floor quickly, because although we're over our time, so for those who want to disconnect, feel free, but I see a hand.
I'll try to make this as quick as possible. Firstly, kudos to IDFC. They're doing a fantastic job of bringing businesses in both the countries together. My specific question is, for Indian businesses who want to enter Europe and Netherlands specifically, is there a panel of Dutch chartered accountants and company secretaries who they can get in touch with in order to form subsidiaries in Denmark and negotiate with landlords and all of those things? Vice versa, does IDFC also have a panel of Indian chartered accountants and company secretaries who the Dutch businessmen can get in touch with when they want to invest and have operations in India?
Well, I would like to answer, but as a moderator, I think I'll give it to Vikas ji to answer it so that I'm not doing all the talking. So
excellent. Apurva, thank you for this question. And certainly the answer to both your questions is yes. India-Dutch financial corridor facilitate and help businessmen from India entering into European market on the matters that you mentioned, both for outbound investments out of India and inbound investments into India. So certainly if there is any specific need where your client or companies from India are looking at, we will be happy to assist you. Thank you.
Thank you. Thank you, Vikas. Thank you so much.
And that would also apply to Invest India or the embassies out there as well to help in particular ways where there are, regulatory affairs or any other points of view. So they too are there. So like I said, each of these associations is in a position to do so. And there are, to add to that, there are organizations on both sides, both the Dutch, although we do not have the concept of company secretary in the Netherlands, we do have RCs and register controllers, which are similar to CAs. So again, hopefully that's an answer to your question, and please do reach out offline. Thank you very much. With that last question, I would like to close today's session and look forward to seeing you in great numbers at our next session, whenever that will be. And once again, thank you to the Indian Embassy for their support, Invest India for their support, without which we would not have been able to do today's event, and ICI as well. Thank you very much. Bye-bye.
Thank you all. Bye-bye.